Hello everybody, welcome back to my channel. My name is Ali. I have over 20 years experience teaching accounting, economics, business and law, and through this channel I'll be providing some stock analysis and also an update on our $1 million challenge, so please stay tuned. In the previous video I carried out a stock analysis for ticker symbol BBIG. This is a stock that has been identified as a potential squeeze stock. It was being looked at in the Discord last week with some significant profits also made, so if you want to look at details of stock analysis for BBIG, please refer back to the previous video. In today's stock analysis we're going to be looking at a new stock. We're also going to be looking at an update for ticker symbol MMAT. Before we do that, quick update on the $1 million challenge. Shortly I will be releasing an update on the $1 million challenge 4-week review, but before we do that, quick update in terms of anybody who's not aware of this. This is a challenge where we're looking at a journey from an investment of $1,000 to $1 million over a period of 3 years. It's based on 201 trades, looking at an average return in each trade of 3.5%. It's not 201 consecutive trades, it's the 201 trades with an average return of 3.5% based on compound return investing, and we do take into account losses. So in the Discord we have a spreadsheet of specially chosen stocks. The community is well over 200 now. Everybody is helping each other, working together as a team, carrying out due diligence, technical analysis, chart analysis, sharing of tips, sharing of buys. So it's a great community. If you're interested in joining, details in description below. First thing I'd like to do is provide an update on ticker symbol MMAT Metamaterials. This is a stock that we have been following quite a long time on the channel, so there is a quick update on this I'd like to share with you, and this is regarding a tweet from Mark Miller. So if you have a look at the screen here, George has responded. So Mark's tweet, I'll just summarize it for you there. Mark Miller, shout out to Mark. He said, "George, are you able to confirm that once NTS Corp deal is complete, Meta will be using the production capability to manufacture semiconductors? Has DD link regarding nanotech, and I believe investors would find this a compelling vertical." He's followed on by to say at the bottom, "I know eliminating the use of indium in semiconductors is a priority for Meta. Whether semiconductors or other products will the completion of nanotech acquisition, which is something that we looked at earlier, and immediate production capability lead to contract announcement soon? Question mark." So the key thing I'd like to focus on is the last thing that Mark has said. Mark has said, will this lead to contract announcement soon? Question mark. So we did get a response from George. Let's have a look at that. So if you have a look at the screen, recent reply from George. George has replied and he said, "Yes, we will be manufacturing our metamaterials and photo masks as well as NIL templates." So great interaction from George with regard to investors, and especially through social media, so that's good news. It's very bullish response. Just to add on to this thread, James Vincent also added in, and he says, "Cheers Matt, love to see people dig into Meta. The industry maybe is complicated and sciencey, but manufacturing contracts are worth dollars," and everybody gets that. Yes, certainly we do get that. And one more comment I'd like to highlight, which is from C Plant, and he said, "My background is in manufacturing, tells me that if I was spending $90 million, I either have a contract in my pocket or to fully utilize that equipment, or I am a very big gambler. I don't think it's the latter. I've made some large equipment purchases in my career, but never without a contract." So what C Plant is implying that George and Meta do have contracts, but because of reasons of confidentiality and reasons of business agreements, they're not allowed to disclose that right now. So there's certainly a strong implication that contracts are in place, which will lead to revenue and which will also lead to significant catalyst for the stock. So overall, great news here for Meta. Today's stock analysis is for ticker symbol AQST Aquestive. This is a stock that has been discussed in the Discord prior to the video. So in terms of looking at this stock, let's have a look at start by having a look at the website and about us and find out what the company is about. So if we have a look at the screen here, the company is advancing medicines, solving therapeutic problems and improving lives. So it's a pharmaceutical company that advances and commercializes medicines to solve critical therapeutic problems and meaningfully improve people's lives. So the thing that I'm interested in this headline is the word commercializes medicine. So obviously that implies the company is generating revenue. So that is something that we're going to look at shortly. Let's now follow that up by looking at the investor relations page, and on here the key thing that I'm also interested in on the screen, you can see here, second sentence, we have a commercial products, Sympazan, and that is a registered trademark, brackets clobazam, and a late stage proprietary product pipeline focused on advancing treatments for CNS diseases, as well as early stage investigational assets that may replace invasively administered standard care therapies. So they also collaborate with pharmaceutical partners to bring new molecules to market using proprietary best-in-class technologies like farm film. So the good news about this stock is they are in commercial business. They do have a product with a registered trademark, and they're also going to have some catalysts that we're going to look at shortly as well. What I'd now like to do is have a look at some other angles to the business, and on the screen here we can see two important aspects of the business which could be future catalysts as well. So the first one is Suboxone, and this is something that was developed in less than 4 years. It's now the market leader. It has a trademark. It's never experienced an out of stock occurring since its launch in 2010. So excellent information regarding supply distribution there. And on the right, the other aspect of the business is Suplens. This is partnered with Midatech to launch the oral soluble film, and what happens is this is dissolving on the tongue. It provides an alternative for people who have difficulty in swallowing. So this is something that has been manufactured since 2010. So certainly seems like good solid history there with Suplens. And finally, the most important thing I think in terms of what's going to give this stock significant boost in terms of a run-up we're going to look at later on is on the screen here we can see Aquestive sponsored clinical trials. So there's two things here that I'd like to focus on. First one is diazepam. We're looking at breakthrough seizures. This is a phase 3 safety and tolerability study of a pharma film, registered trademark based formulation of diazepam in subjects with epilepsy. And then at the bottom we also have a phase 2 study to assess the safety of pharma film based formulation of diazepam in pediatric patients. So two important catalysts here. We're also going to look at potential dates for the first catalyst shortly. What I'd now like to do is start by having a look at the chart from prior to December 2020 for ticker symbol AQST. So what we can see on the screen here is around about December 2020, this stock was trading around $8. So since then it has come down quite significantly. We can see there was another run up after February where it reached $7, and since February it has generally been trending downwards quite significantly. Currently we can see from May all the way up to present end of August, it seems to have strong support between $3.50 and resistance just around $4 and $4.20 right now. So it looks as though it's consolidating. So the strong period of downside certainly looks to be in a process of reversal. So this stock certainly seems to be primed now for a reversal. There are some reasons for that we're going to look at shortly as well. Let's have a quick look at some of the technical aspects of the stock now. So first of all, at the bottom we can see the 20-day moving average is just over 9%. The 50-day moving average is 7.99%, and the 200-day moving average is around about 16%. So what we have here is long-term the momentum is not good. However, short-term the momentum is certainly improving, certainly getting better. In terms of the other thing that I'd like to point out in terms of the total float and the shares outstanding, we're looking at shares outstanding 37 million. The share float 36.78 million. We have an RSI here of 60, and the percentage change on the close of play is around about 2%. So certainly this is a low float stock, and it's certainly possibly primed for significant upside. Let's now have a look at the next reason why I think I'm quite bullish on this stock. So this is the tip ranks price target from 6 analysts. So if you have a look at the screen here, all 6 analysts have rated this a very strong buy. So what's quite interesting on here is on a low, we have this at $7. So if you see close of play on Friday, it was trading around $4. So from the 6 analysts, the low is still quite a significant upside from the $4. However, on a high, we have $28. So it's looking at a 241.5% potential upside from the low to the high. So very significant here in terms of the analyst rating. So what has happened now? This has fed into the marketwatch.beat.com. So if you have a look at the screen here, what we can see here is the high price target for AQST is $30. So obviously they've looked at some additional analysts as well. The low price target for AQST is $7. There are current 5 buy ratings, so there's 5 buy ratings that they've looked at, resulting in a consensus rating of buy. And this is the interesting part: low float squeeze rating, 97 out of 100. Let's now have a look at the Fintel rating for institutional ownership. So we can see here in terms of institutional shares in excess of 17 million, which represents around about 46% of the float. We're looking at 153 institutional owners. These include Bratton Capital Management, they include Vanguard, they include Morgan Stanley. So let's just have a look at some of the key holders in here in terms of the institutional owners. So if you have a look at the screen for largest owners, we can see Bratton Capital Management. I've got shares just in excess of 9.81 million. Douglas K. Bratton also in excess of 4 million. But from an institutional owner's point of view, we can see Vanguard 1 million. And this is the interesting one. Morgan Stanley just acquired in excess of 500,000 shares, and that represents a 54.7% increase. So something interesting there in terms of a change. Vanguard have also increased their interest in this stock by 22%, and they are holding just in excess of 1 million shares. So overall, this is positive news. So we're now going to look at the major catalyst that we're aware of in terms of FDA for this stock. So this is a press release from Benziga dated 3rd of August 2021, and the headline on the screen here you can say is AQST or Aquestive Therapeutics report second quarter 2021 financial results, provides a business update and raises full year revenue guidance. So the key thing here, first bullet point, NDA submission accepted. PDUFA goal is the date of December the 23rd, 2021. So very significant date. I think there will be a run up in anticipation of this date. Second bullet point is on track to report top line data from phase 1 study. So in the second half of 2021. So that should be fairly imminent. We can also see there's going to be a report of increased full year revenue. So we're now going to move on and have a look at that. Let's have a look at the financials now. Let's now have a look at the financial summary. So on the screen here, the 2 columns that I want to focus on are the 2 columns on the left, first quarter March 2021, and the second one, the most recent one, close of play June 2021. So the interesting thing is that at the very top headline, revenue March 2021 just in excess of $11 million. And revenue in June 2021 is now in excess of $15 million. So certainly there is significant growth in sales. So good thing about this stock, unlike many other biopharmaceutical stocks, they do have revenue, they are selling. So in terms of profit, that's not the case. So if we look at net income, March 2021, there was a loss just in excess of 14 million. However, in June, the loss has decreased by approximately 2 million to just in excess of $12 million. So the loss is going down. However, the long-term potential certainly seems to be good for this in terms of anticipation for FDA. And it's certainly a step ahead of the game in terms of many other biopharmaceutical stocks that have zero revenue. So this certainly has revenue as opposed to many of the others that have zero revenue. And the final thing I'd like to just look at in terms of the financial summary is the second row from the bottom, and that is the change in cash. So March 2021, they had a negative cash balance of just in excess of $4 million. So the company was in debt at that time. Good news here, June 2021, company now is in a very healthy position, and the change in cash now, instead of being in a negative balance, this is now in a positive balance, and they have a surplus here, we can see, of just in excess of $6.7 million in terms of change in cash on a positive side. So again, great news for the business. In terms of an entry into this stock, certainly it's worth putting on your watch list. I would certainly, at close of play on Friday, it was $4.04, so I would certainly consider any entry here close to $3.90. Difficult to say. It's a strong possibility that this could make a run as a potential squeeze play. So I think below $4, if there is a pullback, could certainly be a good entry. Thank you very much for watching. Please stay tuned.